Good morning, everybody. Dave Fry, ETF Digest with an ETF in focus. I looked on my screen this morning of all the ETFs, and the only one that's green, aside from bonds, is XLI in the equity space, the industrial. And this weekly chart that we're looking at, once again, we have a rising MACD histogram, elevated RSI, which is a good thing, money flow, which is rising, and of course, up on the day, but only barely. Industrials will rise when the dollar is weak, of course, because then it makes shipping overseas that much more attractive and goods produced in the U.S. also more attractive to overseas buyers. Other annotations on the chart include two moving averages, which seem to be almost overlaid one over the other at the moment, a 5 and 10 period weekly moving average. And you can see this being elevated. We also have our proprietary high-low indicators, and you can see that they have been hit or miss as effective. For example, going all the way back to 2012 in February, you can see it called a pretty good top, and the low, a pretty good low call. Here, this high here was reasonably effective only because you can only expect it to move sideways or down. Here, the next one was not that effective as the markets continued to rally through the beginning of 2013. And then this high here, of course, in March called a temporary top, which lasted over a month and a half. And we've risen and gone down, risen and gone down, and we haven't seen one since. We're long XLI and have been since this breakout in mid-September. It's only a couple of weeks. We have stops in place, and that's the way it goes. If you're interested in this or other ETFs that we cover of the 700 or so, you may take a free trial at etfdigest.com. Have a great day.